All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today's May 2nd, 2025. It is Jobs Day. We got the jobs report, and it is a big beat. 177,000 jobs added for the month of April, well above the 130,000 that was expected. So let's all stop reading there and celebrate and just go aimlessly buy stocks. And certainly we wouldn't want to parse the data and see, was it really a good jobs report or was it really a bad jobs report? Or are they manipulating the data? Don't ask questions, silly rabbit. Just YOLO into zero DTE options and hope for the best. Well, as you know, we are incapable of doing that here on Nobody Special. We can't help but look into the data. And, well, the data is not awful. When you really look closely at it, there's plenty to like about this report, but there's some other things that kind of dent this big, beautiful, let's say there is a gray lining to this big silver cloud. How's that sound? Look, the first things first, downward revisions, they're back. We had March, that big jobs beat from March, downwardly revised by 43,000 jobs. February was also downwardly revised by 15,000 jobs. So combined, you got 58,000 in downward revisions. You got to just take that right off the top of that 177,000 that was added. And so when you subtract the downward revisions, you end up with a net of just 119,000 added. Well, that's a miss versus the 130 that was expected, but you don't really hear about that. You only get the headline number. It's very important to count those downward revisions. And by the way, those downward revisions, they were annoying as all get out during the last administration. I was kind of hoping those were going to go away and we were going to have like reliable data, but apparently everybody does it. So the new guy, he's going to fudge the numbers just as much as the last guy did. Oh, well, we tried. Also, unemployment rate stays at 4.2%. That's unchanged. That's good news. A lot of people were afraid it was going to go higher. Labor force participation rate ticked up by 1/10 of a point. That's good news. More people working there. We'll go through table A9. We'll look at full-time and part-time jobs. Also, another thing that's worth looking at, shout out to Jaguar Analytics on Twitter, the birth-death model. The birth-death model is one of these little corrections that they do to the jobs reports where they try to account for the number of companies that go out of business and the number of new companies that start up creating jobs. Since they don't get that data in real time, they just kind of guess. I'm sure it's an informed guess. I'm sure there's all kinds of math with symbols I don't understand that goes in there to calculating it. But the birth-death model added 393,000 jobs to this jobs report. Now, do you really think we have that many new companies starting versus that many companies going out of business right now, that it's resulting in a net gain of almost 400,000 jobs? That kind of defies belief, to be honest with you. This is not a very good startup environment. Interest rates are higher than they've been for the last couple of years. Consumers are strapped. I'm really having a hard time believing this birth-death model creating 393 jobs like magic out of thin air is a legit number, but hey, that's just me. So look, on the surface, it's a good number. You're probably better off just stop reading there and don't ask questions. That's kind of the takeaway from the jobs report. The market certainly didn't ask questions. It is ripping higher on this news. Now, we've also got some relatively blind optimism, maybe even a little political BS going on this morning. A lot of talk about possible thaws in trade talks between the U.S. and China. And, I've looked this, I've parsed the data, and I've searched, and here's what I get. I get some Chinese, the supreme ultimate minister of buffoonery at the Chinese Department of Propaganda and Bullshittery comes out and says, President Trump and the Americans are frantically calling us over and over again, and we're considering talking to them. But we want them to show us they're sincere first. We want them to get rid of the tariffs first, and then we'll talk. The American press is happy to print this because Orange Man bad. And look, at the end of the day, what do you have? You have some Chinese minister says a thing, and all of a sudden everybody's like, oh, great, trade talks are underway. Okay. Do you believe Western press? Do you believe Chinese government ministry officials? Do you believe U.S. government ministry officials, for that matter? Let's see some actual progress. How about let's see some people at a table actually talking? That's not going to happen. As Craig Fuller said yesterday in my interview, Craig Fuller, CEO of FreightWaves, great interview yesterday talking about logistics in the trade war. Guys, this is a geopolitical shift. This is essentially a new Cold War between the U.S. and China. We're not going to have a meeting and walk away from this laughing about, oh, that was all just one big misunderstanding. This is a geopolitical freaking power grab by the Chinese. The U.S. is sick of it, and they're pushing back. And by the way, the U.S. is highly vulnerable to this geopolitical power grab because we have a manufacturing deficiency in this country. So the Chinese minister saying a thing, does that mean all the trade talks go away? I don't really think so. Anyway, on top of that, we've also got some talks between the Japanese and the U.S. are going on. Reportedly, those talks have hit an impasse over auto tariffs. The U.S. wants to negotiate on bringing down the reciprocal tariffs, the ones that came out on Liberation Day. The Japanese want all tariffs on the table, including the autos and the steel and aluminum tariffs, which affects Japan. So looks like those talks have stalled with the Japanese. We also got big tech earnings from Apple and Amazon. Let's start with Apple. $900 million hit from the tariffs. That is just for the June quarter for Apple. They posted an otherwise okay quarter, modest growth in iPhone sales, mainly driven by that iPhone 16e, the economic model that they just released, their kind of bare bones iPhone. That sold okay in the first quarter, but it's that $900 million hit. That's just for the June quarter that Apple's announcing. Now, keep in mind, guys, we're still on that 90-day clock. Remember, all the reciprocal tariffs came out, and then on April 9th, when the bond market freaked out, President Trump said, okay, we're going to reset all of those to 10% while we talk, except China. So what Apple's doing is Apple is moving their iPhone production to Vietnam and to India for their US-bound iPhones, which is by far their most important market. But remember, Vietnam and India are on the clock to get a trade deal done. Otherwise, their tariffs go up to what, infinity percent, whatever they are. So the $900 million hit for Apple may not be the limit. There may be additional charges depending on the results of trade talks, if any. I thought we'd have a deal with India by now. We still don't. Japan obviously hitting an impasse. Vietnam is a big question mark in this trade war. So Apple is taking a little bit of a hit from that this morning. Now, Amazon earnings were interesting. It was a beat, top and bottom line, but a cloud revenue miss. You've got dramatically slowing growth at Amazon's AWS segment. Now, contrast that. Growth was about 17% at AWS and falling. Contrast that with the 33% growth that Microsoft just reported in their cloud business. So it seems like Microsoft gaining market share from Amazon here. The market did not like that cloud revenue miss. That's where all their AI data center business lives. And, Amazon stock was down about 5% yesterday. It's actually swung positive this morning here. So pretty big 180 intraday for Amazon. I'm not sure what really drove that reversal in the stock, to be honest with you. It could have something to do with the fact that Amazon did not lower their CapEx. So big tech is continuing this big game of CapEx chicken, giving the NVIDIA bros exactly what they wanted. And we also got oil majors reported their earnings today. We've got ExxonMobil, Chevron, both reported earnings. They're being reported as a beat, but earnings declined year over year because of lower oil prices, of course. But the big difference, ExxonMobil is sticking with their stock buyback for now, while Chevron is reducing theirs. It seems like the oil majors are at least starting to go into defense mode, expecting lower oil prices for the foreseeable future. A lot going on this morning. Also, wait, I didn't talk about Taiwan. Well, you know what? We'll get to it. WTF is going on with the Taiwanese currency right now? You got to see that chart. Let's shrink my big melon of a head and see what's going on in markets today, shall we? And guys, don't forget that like button and the subscribe button for the YouTube algorithm. If you're new here, come on back tomorrow and have your coffee with the melon heads, because we do this one every single day. And look at this market, just loving the jobs report. There we go, 8:30. That's when the jobs report came out. The market started heading higher and has not looked back. As I said, just stop reading. As soon as you get the headline, you got the number you wanted, just go buy stocks. That seems to be the message from Wall Street right now. S&P higher by 72 points, 1.28% to the upside. Meanwhile, the Dow is up 495 points, 1.22% higher, almost 500 points in the green for the Dow. And then NASDAQ is higher by 260 points, 1.31% in the green. Looking over at the U.S. dollar, we've had a little bit of volatility since that jobs report, but right now 99.84. That is modestly lower. We were over 100 for a while yesterday, back below that level here. Now, let's talk about some currency things. First of all, we haven't looked at the yen in a couple of days. I don't want to lose track of this one. We're at 144.51 on the USD JPY chart. Now, this goes to show you, right, the yen has been strengthening, this chart moving down pretty much since the start of the year. After the tariff hysteria, we bottomed out at about 139. That's as low as we got. There was a lot of worry about the yen carry trade unwind. Now, since then, we've had a little bit of a recovery. Not that much. We actually saw a similar recovery back in March. So are we going to resume downward like we did last time? I don't know. My gut tells me yes, we will. But keep an eye on the USD JPY chart. It's quiet for now. Emphasis for now. Now, one chart that is not quiet this morning. Look at this. This is USD TWD. This is the Taiwan new dollar. How many Taiwanese dollars it takes to make one US dollar. And I mean, this thing is moving like the freaking Turkish lira or whatever the Lebanese currency is. This developed economy currencies don't make candles like this. I don't know what's going on here, right? And I was talking to some of the guys from Macro Edge this morning. They're not really sure what's going on here. The Taiwanese currency has strengthened by 5% in a day. I've never seen that happen in a major developed economy. 30.608. That is down from 32.09 just yesterday. These are daily candles. And remember, this chart moving lower, that is the currency strengthening against the dollar. And look, like let's zoom out on this chart. You just don't get moves like this. I mean, this hasn't happened ever that I'm aware of. I mean, this only takes us back on daily candles to about 2017, but I've never seen a move like this. Now, here's what the media is offering up. Taiwan dollar soars most since 1988 on bets trade war will ease. I'm having a hard time believing this, all right? The Chinese finance minister says a thing and the Taiwanese currency strengthens 5%. Okay, maybe. The Taiwan dollar, which rarely makes headlines, was at the center stage of currency markets on Friday as sentiment towards the island's assets dramatically improved after China said it's assessing possible trade talks with the U.S. Data showing the island's economy expanding at a faster than expected pace and hopes that U.S. tech giants will import more semiconductors from the region also help to fan optimism. So that's the best Bloomberg can come up with here. And there's nothing inherently wrong about what they're saying here. All these things are true. You did have this optimistic rhetoric from the Chinese. I think it's fake, but the rhetoric is there. You did have some good economic data coming out of Taiwan, and there's optimism about AI always. But does that justify a 5% move in the currency? I don't know. But keep an eye on that, guys. Anytime you see a big currency like that in a geopolitical hotbed like Taiwan making a move like that, something's up there. Keep an eye on that one. All right, let's look at the bond market here. We have got yields are higher across the board. That is bonds being sold. Their price is going lower. So we got a little bit of risk on once again this morning. Right now, the 30-year Treasury is 4.787. That is higher by 5 basis points. The 10-year is at 4.302, higher by 7 points. The 2-year, 3.783, higher by 8 points. And the 1 month is at 4.314. We got bond yields moving higher across the board here, in particular in the middle of the yield curve. And looking over at the commodities board, we've got gold was having a pretty good morning. It was up about $25 a few minutes ago. Then the jobs report came out, and now we've got a little bit of gold selling going on this morning as people move into riskier assets. $3,246 for spot gold. It's still higher by $8 or 0.25%. Spot silver is higher by about 3 cents, $32.44 for my favorite of the shinies, which is up about 0.09%. I still like the shiny. Copper's higher by 1.4% here. A little bit of economic optimism showing in Dr. Copper. Platinum is up 0.8%. Palladium is up 1.1%. But oil is still in the red here, 58.82 for WTI crude. That's down another 42 cents or 0.7%. OPEC will be the big story next week, guys. I believe it is May 5th on Monday that OPEC gets together to decide what they're going to do with oil output. So we will be talking about this one next week. Watch those oil prices. We've also got Bitcoin looking pretty good here this morning, $96,877. That's up by a few $100 more from yesterday. We were very briefly above 97,000 this morning. We had MicroStrategy reported earnings. It was a big miss on lower Bitcoin prices. No real Bitcoin specific news going on this morning. But let's talk jobs. That's the big one. Here we go. U.S. economy added 177,000 jobs in April, a slowdown from the downwardly revised 185,000 in March, but significantly surpassing market expectations for 130,000. Job growth was primarily seen in sectors such as healthcare, added 51,000, transport and warehousing added 29,000, financial activities 14,000, social assistance added 8, while federal government employment experienced a decline of 9,000. I got to be honest with you guys. That's a little disappointing, that 9,000 decline in federal government jobs. All right. Nobody likes to see people losing jobs, right? I understand that's bad. But for all the hoopla about the Doge and all the government buybacks and the judges intervening and ordering you to rehire the people that you fired and all that BS of the first quarter, 9,000 jobs in the federal government went away. That's not going to get us where we need to be. Sorry, guys. We're running $2 trillion deficits. Got to do better than that. But anyway, here's what the chart looks like. 177,000, your downwardly revised 185 in March, and your downwardly revised 117 in February. Look, overall, it was a good report. It was a beat. It's not as good as everybody is claiming it is in the press, but it was pretty good. Now, looking at the unemployment rate, that held steady at 4.2%, unchanged from the prior month. That is good news. And the participation rate ticked up from 62.5 to 62.6. That is also good news. More people moving back into the workforce. You do want to see that. Now, let's talk about what kind of jobs that we got. We're going to go to table A9 in the jobs report. That's where I like to go. That's where you get the full-time, the part-time. You find out, are these real jobs or are these BS jobs that are being added? And right over here, these are the number of full-time workers for the month of April versus the month of March. And it does look pretty good here, actually. Full-time jobs added 305,000 workers, according to the household survey. Now, look, we've seen over the last 2 years or so a lot of loss of full-time jobs and gain of part-time jobs to replace them. That's a lot of economic disparity happening there. But in this case, it's actually pretty good. All right, we're moving back to the upside in full-time jobs, second consecutive month of that. So that's pretty good. Part-time workers, we also added jobs here. It looks like 28.523 million for the month of April. That's up by about 56,000 from the prior month. So we added a lot of full-time jobs. We added a few part-time jobs. Multiple job holders, that actually declined. The number of people working 2 jobs or 3 jobs to make ends meet dropped by 76,000. All right, that's a little optimistic. Maybe people think they don't have to get that night job in order to pay the bills. That's a good sign. I actually like to see that number going lower. And another number here, self-employed, unincorporated. That's your gig workers. That's your Uber drivers, your Lyft drivers. That one's actually higher by 154,000. Now, that is not a signal of economic prosperity. When you're adding 150,000 gig workers, that's people that are just doing anything they can to make a couple of bucks. So, look, there's some good and there's some bad in the jobs reports here. The full-time jobs coming back, I really like to see that one. I don't know how long that's going to last in this trade war environment. But I want to send a shout-out to Jaguar Analytics on X, who posted this one, this birth-death adjustment, adding 393,000 jobs. Guys, that's huge. And honestly, it just defies logic. There is no way we had that many new businesses created in the last quarter to explain 393,000 new jobs, especially not at the rate businesses are dying or filing for bankruptcy and closing stores and closing restaurants. This just doesn't pass the sniff test, this birth-death model. Danielle DiMartino Booth has been all over this one for a couple of years now. The way the Bureau of Labor Statistics calculates this, it's entirely random. And look, all of a sudden, last month it was negative 33,000 from the birth-death model. That's actually a believable number to all of a sudden plus 393. What changed from March to April that all of a sudden all of these new businesses sprang up? It just doesn't make a lot of sense. Thank you, Jaguar Analytics, for highlighting that one this morning. Now let's talk about this thaw in the trade war, or the possible thaw. Well, you tell me if this sounds real. China hints at possible thaw with U.S. in evaluating trade talks. China said it is assessing the possibility of trade talks with the U.S., the first sign since Donald Trump hiked tariffs last month that negotiations could begin between the two sides. China's Commerce Ministry said in a Friday statement that it had noted senior U.S. officials repeatedly expressing their willingness to talk to Beijing about tariffs and urged officials in Washington to show sincerity towards China. I sincerely think the Chinese Communist Party is a bunch of a-holes, but okay, there's some sincerity. The U.S. has recently sent messages to China through relevant parties, hoping to start talks with China. The ministry added, China is currently evaluating this. And look, the press is just happy to print this because it makes Mr. Orange look weak. It makes him look desperate. And so they'll repeat Chinese propaganda if they have to. And China's just saying, yeah, this girl keeps calling me, man. I might take her out. I don't know. We'll see. Meanwhile, like, this guy hasn't been on a date in 5 years. Like, who are we kidding? Like, just sit down and talk or don't. All of this, no, I'm waiting for Xi to call me. I'm waiting for Trump to call me. Drop your tariffs if you're serious. They're calling us all the time, and we're not even picking up the phone. This is stupid, petty, political crap. Look, the U.S. and Chinese economies are divorcing. That's what it comes down to. We're separating. Don't have a choice. All right. This thing over Taiwan looks increasingly likely. I hope that's not what we're seeing in that Taiwanese currency chart today. I don't know what the heck that is. But all while this is going on, while all this petty blustering is happening, we got this one also. China quietly exempts about a quarter of U.S. imports from tariffs. Now, while we're all acting like we're playing tough and this and that, the U.S. is doing this right, 145%. Let's make it 500% tariffs on Chinese goods. We're also exempting things that we kind of desperately need, right? And the Chinese, they're doing the same thing, although our press doesn't cover that because our press isn't desperate to make the Chinese administration look weak like they are here in the States. But at the same time, it's still happening. And I just want to show you guys this chart, what we're showing in Bloomberg. All right, in blue is your total products, your total imports. All right, here's China's imports from the U.S., a lot lower than the U.S. imports from China. That's not news. Now, the amount in blue is showing the total imports. There's the U.S. number below it. The amount in black is the imports that have been exempted from the tariffs. And if you look, both countries have exempted roughly 1/4 of their imports from the other party. Why? Because they desperately need that material for their own economy. We did it with semiconductors. We did it with some other things, mostly electronics. But the Chinese are doing it too. Now, what are the Chinese doing it with? For that, you got to scroll down here. Bloomberg reported last week that the Chinese government is considering lifting levies for certain medical devices and industrial chemicals like ethane. Officials are also discussing waiving the tariff on aircraft leasing. While the U.S. imports far more from China than the other way around, the exemptions highlight areas where Beijing still relies on American products. For example, China is the world's largest plastics manufacturer, but some of its factories depend on ethane, a feedstock mainly imported from the U.S. One word, plastics. There's a lot of money in plastics. What movie? Let me know in the comments. But look, all this plastic crap on Temu, on Shine, all this dollar store garbage, it's all made out of high-density polyethylene or low-density polyethylene or polystyrene or who knows who's this thing. Guys, all that's made from ethane. It's all made from natural gas sourced in the United States. And so while we're all sitting here like putting tariffs on everything, the Chinese can't make that plastic crap if they can't make plastic, and they can't make plastic if they don't buy ethane from the U.S. Just kind of one of the things that highlights how intertwined these economies are. And both economies have these problems despite the stupid, petty bluster coming from the politicians on both sides. Meanwhile, Japan seeks a U.S. trade deal in June amid report of a standoff. Look, Japan also on the clock for these 90 days to stop the reciprocal tariffs. Right now, they're at 10%. They go up in July. But Japan's chief negotiator expressed hopes of reaching a trade agreement with the U.S. in June, even as a media report indicated the two sides remained at odds on the key issue of car exports. The U.S. wants to keep those tariffs on autos. They want to keep those tariffs on steel and aluminum, especially from Japan, who makes most of the big steel foundries. The Japanese want everything on the table. The U.S. wants to keep the auto tariffs. They want to protect the U.S. auto industry. Keep in mind, that's a big voting bloc in swing states also here. The Japanese want it on the table. So a little bit of an impasse with the Japanese. That's another important one. The U.S. needs deals with Japan. The U.S. needs deals with India. And you could argue Vietnam to really isolate China. Those are the three big ones if the goal of isolating China is really what they want to do. All right, now let's talk about big tech earnings. Apple stock drops. Why a $900 million tariff hit could be just the start. Everybody's zeroing in on tariffs. Apple makes their iPhones in China. No news there, but Apple stock was falling early on Friday after the company put a number on its financial hit from President Trump's tariffs. While a plan to build more iPhones in India should help it escape the worst of the levies, Wall Street is still nervous about what comes next. CEO Tim Cook told analysts that shipping devices sold in the U.S. from India and Vietnam rather than China would add about $900 million to the company's cost for the June quarter in the company's earnings call on Thursday. We talked a lot about Vietnam in that interview with Craig Fuller yesterday on my channel. Check that one out. Apple shares were down 2.9% in pre-market trading. I believe they're positive now. That might seem like something of an overreaction for the added cost, but there's no guarantee yet that India and Vietnam won't also face tariffs, despite positive noises about an Indian trade deal from the Trump administration. It's also not clear how Beijing will react to Apple's decision, although products shipped to countries besides the U.S. will continue to be made primarily in China, Tim Cook said. So that $900 million hit, that's just because right now Vietnam and India tariffs are low. They're 10%. That could go up. And if those tariffs go up, Apple's going to take another big hit on their earnings in subsequent quarters. So the market's really sweating Apple and the tariffs. Oh, they're actually down 3 1/3, almost 4% now on the news. All right. So I thought Apple was swinging positive on all that jobs optimism. It is not happening. Down 4% now, $204.71 for Apple. Not liking that tariff risk. Amazon, meanwhile, stock slips after earnings. How it fell short of Microsoft's bar. It's the cloud growth. Amazon shares were falling after the company reported better than expected earnings, but its cloud computing growth is slightly below expectations. For the March quarter, the company reported earnings of $1.59 compared to estimates of $1.37. Big beat. Revenue came in at $155.7 billion, more than the $155.2 billion. So you got a top and bottom line beat. The revenue forecast was pretty good, $59 to $164 billion, where the mid-range of estimates was $161.2. So it's a beat on guidance, but revenue at cloud computing unit Amazon Web Services was slightly disappointing. AWS sales came in at $29.3 billion versus $29.4 billion estimated, a slight miss, a 17% growth rate from the same period in the previous year. Meanwhile, Microsoft is booking 33% growth in their cloud unit. So the market did not like that disappointing AWS growth number, that disappointing AWS revenue. Worth pointing out, Amazon did not lower their CapEx. So the great game of CapEx chicken will continue. Still no news. Only Microsoft kind of gently hinted at reduced CapEx. And even then, you got to squint to see it. So for now, the runaway breakneck spending on GPUs is continuing. Amazon stock has swung positive, though. This was down more than 5% after the earnings release yesterday. Now we're up by 0.4%, $191.23 for Amazon stock. Now let's talk about the oil majors here. Chevron cuts buybacks after oil price drop as Exxon sits tight. And that's pretty much the whole story there, just in the headline. Both companies saw declines in earnings year over year. Although both companies reported earnings that beat expectations, those expectations were pretty low. Chevron is cutting their stock buyback. They want to save money. They want to, batten down the hatches for a prolonged period of lower oil prices. Exxon, not doing that, at least not yet. Exxon has maintained their stock buyback. So let's just look at what those guys are doing here. ExxonMobil is higher by 2.4%, trading at $108.33. Chevron, meanwhile, not doing quite as well, up 1.3%, trading at $138.01. So it looks like the buybacks are making a difference of about 1% between those two stocks today. And last but not least, let's talk about restaurants, because we had lousy reports from McDonald's this week, and then we got Wendys. They add to the restaurant pullback on challenging U.S. market. Seeing a lot of this lately. Wendys lowered its sales outlook for the year, the latest restaurant chain to take a hit from consumer unease about shaky economic conditions in the U.S. Global system-wide sales are set to decline as much as 2%, while the company had forecast in March an increase as large as 3%. The cut follows a steeper than expected sales drop for established restaurants in the first quarter, mostly due to weakness in the U.S. American consumers cannot afford to eat out. Fast food is quickly becoming a luxury item. 2020's bingo update. The U.S. faced a challenging consumer environment, CEO Kirk Tanner said in the earnings announcement, though he pointed to Wendy's holding traffic and dollar share. Not really sure what dollar share means. But look, we've seen a lot of that, guys. With Darden restaurants, not good. McDonald's, not good. Now Wendy's, not good. It's a tough time to be in the restaurant business. Wendy's stock down just a nickel here. It's actually looking pretty good. Wendy's trading on $12.43, off by 0.5%. Could be a lot worse, all things considered, for Wendy's. And I just want to say thank you very much to my friend, the Pasta Man. What's going on, Nashville? He says, buy the headline, sell the story. That seems to be how the algorithms work. All right. Oh, we got our headline number. Quick, buy, a billion times a second. Why not? And then the AI has a chance to read the article and says, oh, crap, this actually doesn't look good. Look at all the downward revisions. Look at the birth-death model adjustment. Okay, sell. But for now, the market appears to be stuck in buy mode because, giving back some of those gains now, stocks are still up a good clip. Look, it was a good jobs report. I like to see the gain of full-time jobs. That's a reversal. We've lost millions of full-time jobs over the last few years. So that was a little bit encouraging. Also, the multiple job holders going lower, I think that's a little encouraging, at least for people's quality of life. That being said, the big downward revisions, like enough of this BS. Guys, we've seen this for years now. Stop. Just give us accurate numbers. They give us a big number so they can go pound their chests in front of the cameras, and then they quietly reduce it and nobody talks about it. It's stupid. And the birth-death adjustment, we really got to look at that. I mean, how did we go from birth-death taking away 33,000 jobs last month and then all of a sudden miraculously adding almost 400,000 this month? That needs a hard look. Again, shout out to Danielle DiMartino Booth, who's been all over that one for a while. But overall, I'd say it was a good report. It certainly wasn't catastrophic. And maybe that's why the market is rallying, because the market was pricing in a lot of pessimism. And it wasn't a terrible report. It just wasn't as good as I think some people are claiming it is. Thank you, Pasta Man, for supporting the channel. Thank you, Uncle Fedster, who says, happy Friday, Jack. I enjoyed the Craig Fuller interview yesterday. Glad you enjoyed that. I really enjoyed talking to Craig. He's a guy with his finger on the pulse, if you will. Whatever's going on in the economy, whatever problems are coming this way, it shows up in the supply chain first. And look, there's a big air pocket in the economy. It's heading our way. It's in the pipe right now. It hasn't gotten here, but when it does get here, the whole economy is going to sputter and spatter all over the place. Kind of like when you get a big air pocket in your water pipes, right? It scares the crap out of you. It makes noises. It makes you think things are breaking. A big decline in ships coming over from China. That's not good for port workers. That's not good for truck drivers. It's not good for U.S. consumers. Looks like the shortages will first show up midsummer, as soon as mid this month, but realistically midsummer. Back to school could be hard. Christmas could be very painful this year because that holiday stuff is not getting ordered right now. And this is typically when they place the orders for that holiday stuff. And well, I don't think, despite the optimistic rhetoric this morning and whatever's going on from the Ministry of Buffoonery over at the CCP, I don't really share the optimism about a trade deal. So thank you for the kind words, Uncle Fedster. Check out that interview with Craig Fuller in my feed yesterday. Thank you, Craig, for your time, by the way. Richard Bell, thank you. He says, by the way, lipstick production is way up. Miss Doge check. Not sure what Miss Doge check means, but lipstick production, I don't know. Maybe that they had to put so much lipstick on that pig of a jobs report. Maybe that's why production is up. Look, the makeup indicator, we've kind of seen that historically, it's like one of those guilty pleasures or one of those, what's the word I'm looking for? Compensating when things get hard, more money gets spent on makeup because it's a small expense and it's a way you can treat yourself without breaking the bank. And so the lipstick indicator, the makeup indicator. That being said, even like Estee Lauder's earnings yesterday, we didn't cover it, but they were pretty lousy. So even that, like the makeup indicator as an indicator of consumer health, it's not really holding up. Consumers can't even afford that. And that's even as return to work is happening. You'd think we'd be selling a lot more cosmetics on return to work. Not happening. So that's kind of interesting. Mish and I have been talking about that breakdown in the cosmetics as an indicator of consumer struggling. Thank you, Richard Bell, for supporting the channel. And Doug Bowe, welcome to the Melonheads, Doug Bowe, a new member. Haven't you been a member already? Maybe he's just redoing. But thank you, Doug, for everything you do for the channel. I appreciate that. Also, thank you so much for all the anecdata that you send. I get a lot of good information from Doug about what it's like to be a farmer, what they're seeing in the agricultural world right now. And let's just say, guys, the people who grow our food are targets right now because it's largely considered to be the president's base, although it's not universal, but it's largely considered to be his base. And it's one of the things that we export. And so every time trade talks break down or every time there's any kind of a trade dispute, American farmers have a bullseye on their foreheads. And agriculture is very hard work and it's a very low margin business. And so these guys, they take it on the chin for the rest of us. So thank a farmer when you get a chance. Thank you, Doug, for everything you do for the channel and for the country, sir. I appreciate that very much. And thank you. Oh, wait, somebody snuck it in there. Learsey, you clever dog, you. Thanks for bringing Craig on for an interview, Jack. Thank you, Learsey. I almost missed your comment, by the way. Almost did it again. Started the music before the last one was done. Are you guys like just messing with me or like, okay, he's about to sign off. Quick, give him another one. Anyways, thank you, Learsey, for the kind words. Again, check out the Craig Fuller interview. Lots of good stuff, especially if you're wondering what to expect over the summer in a consumer environment. Pay attention to what Craig was saying yesterday. Great information from him. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate all the generosity in the super chats. You guys rock. As well as you, my magnanimous Melonheads on Patreon and YouTube. Thank you guys for everything you do for the channel. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button for the YouTube algorithm. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.